Okay, guys, a very quick weekly forecast for GU again this week, which we have been looking at last week as well. In respect to where we are currently at the moment, if we look at it on the weekly time frame, we can see that the market has come in, it's tested the open of a weekly demand candle here. It's rejected, shown us a reaction a few weeks ago, has come back, retested that area, mitigated it deeper by utilizing the inefficiency on this bullish wick that was formed. We've seen that be mitigated to the 50% mark. The market's then reversed from that point and has now started going bullish on the lower time frames. So the areas of interest now that we're looking at is, we know that this area has been mitigated, that we've been targeting thus far. The market's shown us break of structure to the downside. It's now going to create a pullback, retrace, and let us know exactly where it wants to target. We look at the lower time frames. So when we go down to the daily, we can see the break of structures occurred. We can see the market started to turn last week, and it has continued on this bullish pullback from taking that 50% wick and the demand candle to the upside. Now we're still bearish overall. When we look at the chart in context, we are in a bearish trend, and we are anticipating that this bearish trend will continue. We've marked up areas of interest where we've got equal highs, relative equal highs, areas of liquidity where people have sold down from. So you've got sell orders here, 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 and here, which could effectively be targeted on the bullish move back up. I don't think it would be from this area here, because we do have a lot of liquidity lying below us that needs to be mitigated from last year, as we said. And what we're now looking for is to see where the market reacts as market opens, either in Asia or London open Monday, to see whether these areas that we've marked up get targeted. So our initial target for the buy to sell from last week, where we're looking for the trade to come up, target this area, which is also a weekly wick, 50% supply area up here, target this, and then show us confirmation for sells to the downside. However, for it to do that, we also need to see whether it targets areas of inefficiency on the lower time frames in these areas. So we have a weekly wick that was left behind here, and the way that correlates to the chart is obviously this breakdown of structure that caused a break of structure from the previous move. We can see that that area has not been fully mitigated, so the 50% has not been taken. We keep this marker there as an indicator that obviously the market may well turn down, take 50% of this wick, which in reality doesn't need to, because it's rejected from this area. If it's going to continue bearish, it will come and collect whatever liquidity is left behind here as part of this overall move to the downside. So when we look at it on the lower time frame on the daily, we can see this week has been a very good bullish week. If we got in some nice buys here, we could have held these trades and keep holding them up until we get to our higher time frame supply level and possible entry to sell from down here. What we're looking at is two factors. So we've got mitigation of the daily wick that was created on Friday, which could possibly be mitigated Asia open for the market to then continue bullish. So we've got two areas of interest. One is 1.34555, which is 50% of the daily wick. Or if we go down to the lower time frame, we can see a slightly different picture where the market has come down. It's tested a demand candle here. It's taken the close of that demand candle. It's mitigated deeper into the wick of this candle. So effectively, we are now looking at some form of protected area at this wick. So for us, this is the protected low right now. So we're interested to see how the market reacts as it opens on Asia and into London, to see whether we get a test down into this area to mitigate inefficient price action here, and to then continue bullish for the remainder of the week to target our higher time frame supply zone up here, to then take sells down from here. So in essence, what we're looking for is a possible reaction from this level, and then a reaction as it gets up into this level. So those are the trades that we'll be looking at this week. Again, concentrating on GU. If we look at the Dixie and see how that's reacting, it's very, very much aligned with what GU needs to do. So without going too much into detail, we can see that we are currently in a higher time frame area of supply. So the market is bearish. The market is bearish. We've got higher time frames areas of interest here. So the market has continued to break structure bearish. It's bearish in the short term, has retraced into an area of supply that we're now possibly going to see some form of a reaction of, where we have a supply candle where the market's probably going to react off weekly wick. We may see a little bit of a dupe here that kind of comes and wicks out the supply, early sellers on the DXY, and then the market may retrace down to then go bullish. And that kind of falls well in line with the GU scenario that we need for GU to possibly go bearish, bullish, bearish. So it'll correlate with what we're seeing on the DXY. It's just added confidence for us at the moment. And what we will do is just watch these levels that we've marked up on the lower time frames to see exactly how the market reacts to our areas of interest. Alert has been set for the initial buy in the week to see when the market comes and taps the initial area on the daily 50% wick to see what type of reaction we get and whether we get that turn back up to the upside to then buy up for this trade, which should be in the region of 130 odd pips. So we'll probably be looking for a 130 pip move during the week and then possibly selling down for the long term to hold that trade for the weeks ahead. Again, any questions, please do like, comment, share, and subscribe, and forward this on to people that you feel that it may benefit. It does help the algorithm on YouTube if you do like, share, and subscribe, and also place comments. Again, if you guys have any questions, please do hit me up in the comments or on Instagram, and I'll be more than happy to engage either on a one-to-one or through DM chat. Take care. Bye.